This is the big week. Nvidia is reporting earnings. And it's such a big deal that I've started just highlighting Nvidia on these Earnings All Stars videos because this is all anyone cares about. Can they beat and raise again? They've been doing it for nearly 2 years now, but everybody keeps waiting for the shoe to drop, for things to slow down. But recently, just a few weeks ago, Jensen Huang, the CEO of Nvidia, said that there was insane, that's his word, insane demand for the Blackwell chips. That's the next generation AI chip. So what's going to happen this quarter? I'm assuming they're beating again because otherwise they would have prepared us for, some kind of miss. But how big will it be? And what else are they going to say about what's going on out there? Let's start off by taking a look at the earnings surprise chart that they have, and you'll see how good it really is over more than just the last 2 years, but the last 5 years. So Nvidia has a great earnings surprise track record. As you can see, there's just these two misses in 2022 when all the growth stocks were pulling back and things seemed to be slowing as the Fed started raising interest rates. So we had those two misses. And then after that, it was the beat and the raise. But the analysts couldn't really keep up, even though they were raising and giving the guidance. But you're still not seeing like really large raises or earning surprises here. This one is 19%. That's a decent. So we're getting double digits, 13, 11. Last quarter was just 6%. Some think that this beat will be smaller than some of the others, but that is only because it seems like the analysts are finally getting a little more clues on like what is going on at the company. But let's take a look at those detailed earnings estimates to see what are the analysts doing. So it is a Zacks number one rank. And when I saw that, I thought, are they raising again here into the number? And sure enough, they are. So this is third quarter 2025. You can see 3 estimates are higher in just the last week. This is going into the number 4 for next year. So they already feel like, hey, we're behind, especially given Jensen's insane comment that he made a couple of weeks ago. So they're already thinking we're a little bit too light. So they're looking for 283 for the year, 74 cents for the quarter. That's up from 68 cents just 90 days ago. And that would have been after the last earnings report. But you can see 3 estimates higher as well for the quarter. So the analysts are now pricing in something a little bit better. The Zacks consensus, however, is still kind of staying at 74 here through the last 30 days. So that indicates to me that a couple of the analysts were maybe a little more conservative and have decided, I'm going to be a little too conservative here, so I need to raise a little bit. And so they are, but it's nothing probably all that drastic. Now we can see in the most accurate estimate here, and this indicates the most recent of the estimates coming in, that they did raise to 76 cents from 74. So a couple cents they're adjusting here going into the number. But like I said, I'm not expecting that big of a beat. Look at last quarter. I said it was only 6.3%. And you can see they only beat by 4 cents. So if we have some of the analysts kind of raising a couple of cents, they may only beat by a cent or two and maybe even meet. That would be a first because you can see that has not been happening, even though they've beaten and raised and gave the guidance. So all of that is looking good. I've said before, the earnings and sales growth is tremendous with a company of this size. We're not talking about a small cap that's growing quickly. We're talking about a mega cap company with over $1 trillion market cap and one of the biggest companies now in the world. And look at that sales growth for this fiscal year, 105%. It's unheard of to see these numbers. Earnings growth of 117% now. Next year's still looking very healthy, 42% and 37% on the earnings side. But I know everybody's concerned about that valuation. But let's look at what the price of consensus, because it's been up and to the right and very sharp. But now that the stock market and Wall Street's getting a little more used to what is the story here after 2 years, you can see a little bit of broadening out here and not quite as up and to the right as swiftly. This is healthier. This is a better chart. This is what I like to see on these growth companies. So I'm liking this a lot, and it's still showing even through 2026, which is this tan line, very nice future earnings growth, but that's still a ways out. They're on the fiscal year again, but this is, still to come in another, 6 months or so. Okay, so what do the valuations look like? I always like to take a look at the financial overview on a company like Nvidia. Nobody's really caring what the PE is, but it's at 50. And historically for Nvidia, that's around its norm of the last several years, even before the AI play came into being. So we have a 50 on the PE PEG ratio because those earnings are soaring, 1.4. So it's actually very attractive on the growth and value side of things. But the price to book is really where you start to see how expensive it is at 59 times, and then price to sales at 36 times. Believe it or not, this is not the most expensive tech stock on the price to sales ratio, but it's definitely way high. It's usually you look at 10 and above as being kind of extreme valuations on the price to sales ratio. And right now we're seeing it at 36. So it's been high for the last 2 years, hasn't stopped anything, but eventually the street will care about what this is, but maybe only after the incredible growth really does start to cool. Once it's only growing at 15% to 20% on either sales or earnings or both, then we're going to start to care a little bit more about these other valuations. But for now, we don't care. And the story is Blackwell and the incredible demand for these chips that, Jensen himself calls insane. Will it be insane? We're about to find out in the numbers, but really also in what they raise their guidance to, if anything. We will see. So far, it's been a beat and a raise since the AI revolution began, again, just about 2 years ago, almost 2 years ago now. But at some point, that will slow. And also Nvidia execution. That's true on all of these companies. We've seen kind of a breakdown of that with some of its suppliers who have not been able to keep up with this incredible demand, because the pressure is not just on Nvidia, it's also on those who are building the data centers, building the racks, cooling it. All of these things have to work in tandem. All of them are seeing an explosion in demand, in sales growth, earnings growth. But the companies really have to step up into the occasion and really do have to execute. So these are things we'll be watching all this week. I know you're all watching it too. But Nvidia taking center stage. It's going to be a market mover, ticker NVDA, if you don't already know it. And I'll be back with some more earnings charts, because there's more than just Nvidia going on this week. We're going to have Palo Alto Networks, Snowflake, and a bunch of retailers. And yes, the consumer still matters. So tune into my other Earnings All-Stars videos. They're going to be going for a couple more weeks here until we wind down. But be sure to get them on Zacks.com/YouTube, which is where you're watching this, hopefully. And otherwise, I'll see you with those other earnings charts.